Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment, taking a look at Target. For that, we want to bring in our next guest, and that is Landon Swan, co-founder of LikeFolio. Landon, when I was heading to break, I asked the question, can Target get out of the mud, given how the stock has performed this year, down more than 30%. Taking a quick glance at your data, it looks like there might be some potential, but take us through what the takeaway is.
Sure. I think when you look at the data, there's hope, right? I mean, this is a stock that's just been crushed. I think it's down 34% year to date, 40% year over year. And it's actually kind of hitting a support level, if you will, around the 85 to 88 area that it's hit several times this year. So it's trading very low, and with good reason. I mean, they've done a pretty poor job on execution. They used to be a bit of a LikeFolio darling with their data. They crushed Walmart and happiness for a long time. That has since reversed, and now they're losing to Walmart and happiness, which is, I think it's sad to see, basically. But they've got a new CEO. There's a call today, or earnings call. I think everyone's looking forward to hearing, what his plan is. What are the specifics of his plan? He says three things. He says he wants to improve the Target style, improve the shopping experience, and use technology to increase efficiency. So I think people want to see specifics about that. But really, when we talk about what the data looks like, number one, we like to look at web visits. Are people going to Target.com, and how is that comparing to some of their peers? And when you look at that, it paints a pretty rosy picture because Target's at plus 19% year over year. Now, again, this is a year over year category, right? So this is Target versus Target a year ago, which was pretty low. So keep that in mind. It's always easy to beat really bad comps, and that's what Target's doing here. But it is a sign that perhaps this company's bleeding is slowing or stopping. And with the stock as low as it is, I think this could be the beginnings of maybe a base out, a consolidation, and maybe a turn towards the upside. I don't think they're going to come out gangbusters and go up 20% on earnings. I don't think that's the case, but I do think that the bleeding is likely slowing or stopping, and I think it could give investors some optimism. So they're the top of this chart, as you can see. Walmart's right behind them. Some of the bigger names, Amazon and Costco, they're victims of their own success on the year-over-year basis, right? They've been doing really well, so it's tough to keep up with those numbers. So again, take this all, with a grain of salt, because it's all about how they've done versus themselves a year ago. I think some of the stuff that, Target, like I said, they had very high happiness for a long time. Then they kind of dipped their toe into politics a little bit. They got into some pride stuff, which made one side mad, and then they rolled back DEI, which made the other side mad. And it's just like, this should be taught in every college class for business. Just stay out of politics, just do your business, and let people assume the best in you, and just stay out of it. So I think they've learned their lesson. New CEOs, and I don't think they're going to make that mistake again. But when you look at last quarter, they did fairly well. Their digital was their best channel, which again is why we're looking at their website visits, up 4.3%. Now we've got them at plus 19%. That's a big move up. So we're pretty excited about that. We do know that the foot traffic reports out there are looking to come in at about negative 5%. I think that's likely priced in. That's probably part of the reason they're so low. So that's key. And then also I think that people are looking, and what we've seen in the sentiment is it's kind of turning into more of a value play for shoppers, where it used to be a bit of a premium over Walmart. It had nicer shopping experience, better style, and a little bit higher prices. But now people are going to Target for better deals, which I don't think you want to get into that. I don't think as a retailer you want to fight and win on price. I think you want to win on other areas, which is why I like 2 out of 3 of his are talking about that, the style and the shopping experience, getting that back so that they can compete on those instead of competing on price. We'll see if he's able to execute. But overall, I think this is just a story of, we think that Target is likely slowing on the pain. It's not necessarily this is the bottom, but it's probably probably is the bottom. And I don't think they're going to run up like crazy, but I do think that this could be, if you look back a year from now, 88 could look like a pretty good bargain to buy these shares. So we'll see on the report, but overall fairly positive, mostly based on really bad comps.
Landon, hope is not a strategy. We know that. And Target has been disappointing investors for the last year and a half. And you mentioned, the digital sales were up 4.3% year over year, but then comparable sales were down 1.5%. That's what matters because they're coming from a low base as far as digital comparable same-store sales, 1.9% decrease in Q2 year over year. But I think I'd take a grain of salt. The one chart that you had about the year-over-year change in visits up 19%, but yeah, it's coming from a low base. This stock is, bottomed out here near 6-year lows. But the other chart that you have, and I like to look at this one, where you're starting to see trending web visits versus its stock price, where that sends a better picture for me. Is that why you guys are a little bit more optimistic with this kind of data?
It is. I mean, this is, you can see a little bit of a divergence here. We like to see those two lines separate. If we do, that tells us that we believe one thing while Wall Street believes another. And so the case that we're seeing is there is a slight uptick. Now, of course, we're heading into, Black Friday and all that kind of stuff, but it's still year over year. There is a bit of an uptick, whereas the price, as you said, has just been beaten down 6-year lows. It's trading very, very low. So it's telling two different stories. Consumer interest was at 6-year lows and kind of flat, then we'd be pretty neutral right here. But the fact that it's doing better, right? It's not gangbusters. It's not amazing, but it's doing better. And Wall Street has basically priced in just continued struggles for Target. Tells us that, hey, I don't think they're really struggling as bad as Wall Street is expecting them to. So that's the divergence play. It's not huge. Like, we have this earnings score that goes from -100 to +100. They're +21. So they're just over the edge of where we would place a trade. 20 is where we would place a trade. So we're bullish enough to place a trade. We're not going all in. We're not buying out of the money calls or anything like that. It's a risk-defined strategy is the way to go for sure. But yes, it is something where we think that Wall Street's just a little bit too sour on Target. And again, it's going to come down to guidance. I mean, that's kind of what they missed on last time. They guided a little bit lower. They forecasted a little bit lower. Said it's not going to be a great next quarter. But we've got this new CEO in. Again, we want to hear what he's got to say. Hopefully he's got some specifics. But the 3 key goals that he's been talking about are really strong. It makes sense. And I think it gets Target back to where it was when it was in our data beating Walmart on the consumer experience level. So yeah, a little bit of a divergence. I do like that chart, Tom. You got that one picked out well. But yeah, not super crazy, but enough to go a little bit on the bullish side.
So in other words, like dip your toe in the water, not in the deep end, but basically, start to get in the shallow end on this one. But it is interesting, the point that you made, Landon, about price, because I've heard that recently. I have been to Target, I could count on one hand in the past year how many times, just a couple of times, because honestly the experience is not what it used to be there. So we'll see if they are indeed turning a corner. We'll leave our conversation there for now for time, Landon. That's Landon Swan, co-founder of LikeFolio, with the latest look at Target, the artist that we formerly called Target. We'll see if maybe some of the luster is coming back. Let's get